You cut your S&P target last week due to the uncertainty around Fed policy. How much room is there on either end for even a hawkish surprise, given how much has already been priced in, or a dovish one?
Well, look, as you said, if you look at the 2-year Treasury note yield, which tends to be a great year-ahead indicator of what the market anticipates the Fed funds rate will be, the 2 years, as you pointed out this morning, 1.33%. So, and here we are just a little bit north of zero. So we got a ways to go. And the big debate is, are they going to do it in measured 25 basis point increments, or are they going to do it starting out with a 50 basis point increment? I guess the answer will partly depend on what kind of surprise we get on the CPI this morning. But I would like them to just get on with it. Let's do 50, and the market's already discounted it. So just do it.
In terms of what matters to this market, you say all of this has been discounted, has contributed to a lot of the turbulence we've already seen in 2022. Is it just that macro policy environment that matters here? You were talking about profit margins, the earnings story. Does that just matter less right now?
It does, but to your question about corporations and the impact on profits, I mean, the reality is that those profits, increasingly, we have to look at them discounted by the kind of inflation that we're getting. When inflation was around less than 2%, nobody really cared about what impact that was having on revenues and earnings. But now clearly we're not getting as much bang per buck, real earnings, if you will, from this kind of inflation. So we need to see inflation start to moderate in order to see kind of stronger organic earnings than just price increases.
Yeah, there's a trend right now of flows of equity money abroad. And maybe it's that I don't want to own Apple, I want to own something abroad. Do you buy it, or do you stay with American big tech, the defensives?
I would stay with the U.S. That doesn't mean that I wouldn't invest overseas. But I've been arguing that one of the investment styles is stay home versus go global as an investment style. And I've been promoting stay home really almost since the beginning of the bull market, and it's worked out extremely well. And I'd stay with it. The U.S. has a very diversified base of businesses, and it's not just tech that has outperformed. We've seen lots of other sectors like healthcare and finance outperform the rest of the world. And I think we continue to do that. We have a premier technology sector, but it produces a lot of technologies that lead to fintech and health tech. So all in all, I would stay in the U.S. on an overweight basis.
Ed, final question. You own this phrase. Are the vigilantes back?
Well, I think we're going to find out very shortly here. Beware the Ides of March. The FOMC meets the 15th and the 16th, and they should be announcing that they're done buying securities, and that will finally free up the bond vigilantes to express their opinion here. And so I think they're waking up.